Picture this. It's a stormy day in the markets. Investors are absolutely scrambling. Some turn to gold, the age-old safe haven, while others are betting on Bitcoin, which is new age gold to many. But which one would you choose? Gold has protected wealth for centuries, while Bitcoin promises a new era of growth. Each has its strengths, but deciding which asset is your go-to during uncertain times, it can be pretty difficult. It's getting to that point. But what if you could navigate this situation with confidence, knowing which investment truly matches your goals without any doubt in your mind?
So how is that possible?
Now stay with me here as I have a conversation with my AI assistant Tiara to dive in and compare them and reveal which is the better investment. So first, Tiara wanted to make sure we all understand how the US economy and gold have coexisted for such a long time, and why it has the inherent value that it does and why people trust it so much.
Let's talk about gold's roller coaster relationship with the US economy. In 1834, the U.S. started leaning towards a gold standard, making it official in 1873. This meant every dollar was backed by a specific amount of gold, giving people major confidence in our currency. Fast forward to the Great Depression. In 1933, FDR took us off the gold standard for domestic transactions to give the government more economic wiggle room.
Now, I thought it was interesting how Tiara used wiggle room, and I wanted to elaborate a little bit on that. So the reason why FDR took us off of gold was for 4 major reasons. So one was that the Federal Reserve could increase the money supply without being constrained by gold reserves. 2, the ability to increase the money supply helped fight the severe deflation of the economy. So prices had been falling dramatically, which made debt much more difficult to hold and basically reduced spending and investment significantly at the time. 3, it made American exports much more competitive internationally because the currency wasn't worth as much compared to other currencies. And finally, 4, it prevented people and banks from hoarding gold due to fear.
We kept it for international deals until 1971, when Nixon cut the last tie. There were a number of reasons he did this, but 2 of the biggest drivers were that foreign governments wanted gold payments instead of the dollar, which was impacting U.S. gold reserves, and ending the gold standard gave the U.S. complete control over its monetary policy. Since then, we've been on a fiat currency system. Our money's value isn't backed by gold, but by government say-so and public trust.
Knowing this stuff is important because it helps you realize why so many people are bullish on gold as an investment. Now, it's been around a very long time. Our own government has gold reserves in case that's needed. And it's a physical material, meaning that you can hold it in your hand. One thing I think that's important to note here is that Tiara mentioned we're now on a fiat currency system, meaning our money's value really isn't backed by anything other than the government and public trust. And while Bitcoin doesn't have the government's backing, it also has an interesting history to consider.
Bitcoin burst onto the scene in 2009, and it's been shaking things up ever since. So, what exactly is Bitcoin? Started in 2009, you can think of it as digital money that exists only on computers. There's no Bitcoin you can hold in your hand like a dollar bill. Instead, it's stored virtually, and the price of Bitcoin is determined mostly by public trust, supply, and demand. The big idea behind Bitcoin was to create a decentralized currency that doesn't need banks or governments to work. Instead, it's something that people can exchange with each other without a third party being involved.
Now, there's more to the Bitcoin story and how it all started, but I think that this simple overview is very helpful. But people are probably wondering what actually makes Bitcoin valuable aside from public trust. And there are 4 things that are worth mentioning.
1. Limited supply. There will only ever be 21 million Bitcoins. This scarcity is part of what gives it value. 2. Transparency. All Bitcoin transactions are recorded on a public ledger called the blockchain. It's like a digital record book that anyone can see at any time.
And because I was curious, I just looked at the blockchain off camera. And in the last 24 hours, there have been $6.1 billion sent and just over 638,000 Bitcoin transactions, which is pretty crazy volume if you ask me.
3. Volatility. Bitcoin's price can swing wildly, but its increasing value and market cap has allowed it to have more stability over time. 4. Global use. You can send Bitcoin to anyone, anywhere in the world, without dealing with banks or exchange rates.
As a real-life case study, my wife is from Brazil, and she has a very large social media following, and we use Bitcoin all the time to work with brands in the country, as transferring funds from Brazil to America can be a real headache. So if you've heard the rhetoric that only criminals use Bitcoins, I promise you that's simply not true.
People invest in Bitcoin for a bunch of reasons. Some think it's the future of money. Others see it as a way to diversify their investments. And let's be real, some folks are in it for the thrill of potentially striking it rich. But remember, Bitcoin is still pretty new and not fully understood. It's like the Wild West of investments. Exciting, but potentially risky.
Now, this is all absolutely true. While Bitcoin continues to grow in value and market cap, there have been quite a few times where the price has been rocked due to some scandal within its ecosystem. So if you do like it, make sure that you invest with caution. Now that we're all on the same page on the history of both these assets and how they really fit with the economy, let's move to actually comparing them. Now, Tiara thought it would make a lot of sense to compare them on the top 5 factors that really matter, which are volatility, liquidity, regulatory environment, potential returns, and storage and security. So first, let's talk about volatility.
Gold has showcased volatility linked closely to geopolitical factors, economic indicators, and central bank demand. As of 2024, fluctuations in gold prices reflect investor behavior in response to economic uncertainty and inflation fears, marking it as a secure asset. Recent trends have indicated substantial price changes driven by factors such as Federal Reserve policies, inflation forecasts, and geopolitical events, contributing to its notable volatility as it continues being viewed as a hedge against market fluctuations. Bitcoin's volatility remains a defining characteristic, characterized by significant price swings influenced by market sentiment, speculative trading, and external factors such as economic trends and regulatory changes. In 2024, Bitcoin has shown declining volatility rates, being less volatile than many comparable stocks, with investors historically finding good compensation for taking on this risk. This trend suggests stabilization in its volatility over the upcoming periods, influenced by its fixed supply and robust demand patterns that respond to market conditions.
So both Bitcoin and gold show volatility, but their drivers are different. Bitcoin's volatility is trending downward, which makes sense to me as it's really starting to show market maturity. Gold's volatility is more tied to the global economic factors, making it a potentially more predictable asset in times of economic uncertainty, kind of like right now. Next, let's have Tiara compare their liquidity. And while Bitcoin used to be brutal here, it's certainly gotten better with time.
Gold is regarded as one of the most liquid assets, allowing for quick conversion to cash with minimal impact on its price, influenced by strong global demand and active trading in various markets. Its liquidity is supported by both physical and paper gold instruments, widely recognized in financial markets. Bitcoin liquidity refers to the ability to quickly and efficiently exchange Bitcoin for cash or other assets without substantial price distortion. This characteristic is vital as it affects trading efficiency and market confidence, driven by factors such as the number of market participants, trading volume, and price stability.
Both assets offer high liquidity, but through different mechanisms. So Bitcoin's 24/7 trading and digital nature provides constant accessibility, while gold's established global market ensures that there's steady liquidity. The choice between them might really depend on an investor's need for immediate access versus traditional market hours. Next, we need to jump into the regulatory environment. And while things are pretty stable with gold, governments are constantly adjusting to Bitcoin.
In the gold market, regulations have increasingly targeted illegal mining operations, ensuring supply chain transparency and addressing environmental concerns. Recent legislation in the U.S. aims to explore a return to the gold standard, reflecting renewed interest in gold's value in economic stability. Additionally, awareness around the risks of illegal gold imports has led to calls for stricter regulatory measures. The regulatory environment for Bitcoin has become increasingly stringent, with governments worldwide introducing frameworks aimed at preventing misuse and ensuring financial transparency. Key regulations include the EU's MiCA, focused on protecting investors and promoting innovation, and US SEC regulations to impose stricter controls on trading platforms to prevent fraud.
The regulatory landscape for both assets is absolutely evolving right now, but in different directions. So Bitcoin faces increasing scrutiny and regulation aimed at investor protection and making sure people aren't using it for illegal activities, which has always been one of the biggest arguments against it. While gold regulations focus more on supply chain integrity and environmental concerns, which are all valid and aren't likely to stop anytime soon. From here, let's jump into the area where I feel gold and Bitcoin differ greatly, which is the potential returns.
Gold generally offers more modest returns compared to Bitcoin. Historically, gold has been viewed as a safe haven, maintaining its value during economic downturns. Its average return has been around 8% per year over the last 2 decades, but tends to provide lower long-term appreciation than equities. In 2023, gold experienced an approximate return of 13.8%, and while it can appreciate in times of market distress, its returns typically lag behind those of Bitcoin and stocks in strong market conditions, reflecting its role more as a store of wealth. Bitcoin's potential returns are substantial and have become a focal point for many investors. In 2023, for example, Bitcoin surged by 156%. Analysts predict significant future gains, with targets suggesting prices could reach as high as $200,000 by 2025 or even $1.48 million by 2030. The market has reacted positively to recent regulatory developments, such as the approval of Bitcoin ETFs, which have increased investor sentiment and market accessibility. Bitcoin's return on investment has significantly outperformed traditional assets, making it an appealing option for those seeking high returns.
Now again, before I continue, I definitely want to mention that Bitcoin absolutely has its risks. But personally, I think this is where the biggest difference is. Bitcoin has shown potential for exponential growth, while gold offers, more modest but steady returns. An investor's risk tolerance and investment timeline is really the key to choosing between these two options. And I also want to mention here that the target prices kicked around by Tiara, they're from analysts that hold their own Bitcoin. So of course, they're going to tell everybody how big it can get, especially the 1.48 million prediction by Cathie Wood, who is the CEO of ARK Invest. Now, me personally, I hold about 10% of my total portfolio in Bitcoin, and a small amount of that is in Ethereum. Now, for me, this is a risk that I'm willing to take. While a 10% loss would hurt, it definitely wouldn't break me. And although I wouldn't be happy about it, I'd be okay if it all went to zero. So yes, I do dabble in Bitcoin and continue to dollar cost average about $200 a month into it because I think it's a great way to diversify away from fiat currencies. But I'm still cautious, as you really never know if there will be an astonishing rug pull at some point. Next, let's move to storage and security.
Storing gold in professional vaults offers a superior level of security. These vaults have features such as armored walls, continuous video monitoring, and protection against environmental threats. While home storage allows for immediate access, it poses higher risks, including theft and accidental damage. Adopting secure vault storage is broadly recommended for safeguarding gold investments and securing them against market risks. For Bitcoin, cold storage, or offline wallets, is considered one of the safest methods for holding Bitcoin because these wallets are not accessible via the internet. This method allows users to securely manage their private keys, minimizing risks such as hacks or loss due to exchange failures. It is advised to use hardware wallets for long-term storage of Bitcoin, ensuring that only minimal amounts are kept in hot wallets for transactions.
Both assets require careful consideration for storage and security, but in very different ways. So Bitcoin security relies on technological solutions, while gold security is definitely more physical. The choice between them might depend on an investor's comfort with digital versus physical asset management. For me, I have almost all of my Bitcoin in cold storage, and I consistently empty out my exchange account every couple of months or so to make sure I have full control. Now, as an FYI, this is absolutely the way to go. Keeping all your assets on an exchange like Coinbase is as secure as their systems. And while they haven't been hacked yet, it only takes one exploit and things could get nasty. You could lose a lot of money really quick. The one thing that always cracks me up about gold is that people hold it, but then they have it stored in a secured vault somewhere in a storage facility. Now, I've always thought that this was kind of strange because the argument usually is that, hey, I want gold because you can hold gold, but you can't hold Bitcoin. But if you don't have that gold in your possession, you can't actually hold it. And if the place that you store it at was robbed or has corruption internally, or you get in a really bad situation, you need the gold, you won't have it. So I've never really bought the argument itself. Now for the last section, which is what you all want to hear. And at first, when I asked Tiara which asset is better, she gave me some very neutral, kind of politically correct answer saying, oh, it depends, blah, blah, blah. And I pushed hard on this. So I wanted to make sure I get an answer out of her. So I was actually able to get a real answer, which I was excited about. So here's what Tiara says. And remember, I'm not a professional and neither is she. And investing in either asset, it does come with risks. So speak to a professional if you want. But here's the big reveal, and I did not influence her in any way in her response.
After weighing all the factors, if we have to crown a winner in the Bitcoin versus gold showdown, Bitcoin comes out on top as the better investment option in my opinion. Here's why. Growth potential. Bitcoin's historical performance and future predictions suggest significantly higher potential returns compared to gold. While past performance doesn't guarantee future results, Bitcoin's upside is hard to ignore. Technological relevance. As we move further into the digital age, Bitcoin's role in the future of finance seems more assured. It's at the forefront of financial innovation, which could lead to increased adoption and value.
This is actually a really good point. And as we evolve as a race, we need the ability to transfer funds digitally. So just imagine one day if we are a multi-planetary species like Elon Musk says we will be, and you have to send 50 pounds of gold with you to Mars. Absolute headache if you ask me.
Accessibility. Bitcoin's 24/7 trading and ease of purchase make it more accessible for younger investors, which aligns with our channel's primary demographic. Diversification. For many investors, Bitcoin offers a new way to diversify their portfolio that's distinctly different from traditional assets like gold. Scarcity. With a fixed supply of 21 million coins, Bitcoin's scarcity could drive up its value over time, potentially outpacing gold's more stable supply.
There's no doubt that Bitcoin is scarce, but so is gold to a point. I guess the question here is, we don't know which one is more scarce, though we do know that there is a limit of scarcity with Bitcoin.
All of this comes with a big caveat. Bitcoin is still the riskier choice. Its volatility means it's not for everyone, especially if you're close to retirement or can't afford to lose your investment.
If I'm being honest, I was excited to get an actual answer on this, and I didn't really expect to be able to do that from AI. Pretty cool to see that AI is on the side of Bitcoin, and maybe, this is just a psyop by them to destroy the human race. But let's hope not, and let's just enjoy taking the Bitcoin ride to the moon instead. That said, if you like the video, please give it a thumbs up so that others will see it. Or to support me, check out this video over here, which is one that YouTube is recommending for you, and I have no idea what it is. Or you can watch this video right here, which is my most recent video. And as always, remember to subscribe to the channel to unlock financial success one AI chat at a time. Thanks for watching.